All right, let's talk BigBear AI. We just got their third quarter numbers, and honestly, this one wasn't really about the past 3 months. It was all about a massive, game-changing move that could totally reshape this company's future. Let's dig in. So, here's the plan. We'll kick things off with the Q3 print, then jump right into the big news, this Ask Sage deal. After that, we'll look at the financials, the good and the bad. Then it's our take on what's next, and we'll wrap up with a potential trade idea. Okay, let's get right to it. Section 1, the Q3 print. We're talking headlines and how the street reacted. So right off the bat, the headline numbers looked pretty good. BigBear AI pulled off a solid beat. You can see revenue came in at $33.1 million, which was nicely ahead of the $31.8 million Wall Street was looking for. And check out the bottom line. Their adjusted loss was just 3 cents a share. The consensus was a 5-cent loss, so they beat that by a good 2 cents. All in all, a clean beat on both the top and bottom lines. And how did the market react? Well, they loved it. The stock shot up over 6% by the time the next day's session closed. But here's the really interesting part. Look at the volume. It was nearly double the average. That tells you something important. It says investors were looking right past some of the current challenges and focusing squarely on the future. And that future-focused reaction from the market? It brings us to the real heart of the story here. This is the main event of the quarter, maybe even the whole year for them. Management is officially going on offense. Yeah, the CEO, Kevin Mullinahan, basically kicked off the call by saying, hey, remember 3 months ago when I said we were going on offense? Well, we did it. He made it crystal clear that this wasn't just another earnings report. Nope, this was them putting a flag in the ground, making a major strategic pivot. And that pivot has a name, Ask Sage. So what the heck is Ask Sage? Think of it like this. It's a super secure bubble for generative AI. It lets groups like the Department of Defense and other intelligence agencies use the most powerful AI models out there, the kind of stuff you hear about every day, but with their own top-secret classified data. It's basically the key that unlocks cutting-edge AI for the whole national security world. Now, management didn't just stumble into this. They were really clear about how this fits their grand plan. They've got this 3-part strategy for acquisitions, and Ask Sage fits perfectly into bucket number 3. Buying a core, platform-level technology. You know, something that can act as a foundation and make everything else they do better and faster. Okay, so what did this cost them? Let's talk numbers. BigBear is shelling out $250 million for this. But here's the thing. They're not just buying a startup with a cool idea. No way. They're buying a platform that's already a big deal. We're talking over 100,000 users already on board, and it's on a path to hit $25 million in annual recurring revenue next year. So this isn't a bet on the future, it's buying into current success. But the real magic here, or at least the plan, is in the synergies. It's how 1 + 1 = 3. They're trying to create this powerful flywheel effect. So step 1, take Ask Sage and sell it to all their existing government clients. Step 2, take their own products and introduce them to Ask Sage's massive user base. Step 3, wrap their expert services around the whole package. It basically turns this acquisition into a super highway for selling everything they make in the future. Pretty smart, right? All right, that's the exciting part of the story. It's the big, bold vision. But now we got to come back down to earth and look at the numbers as they stand today. And this slide really shows the 2 sides of the coin for BigBear right now. It's a real push and pull situation. In one corner, you've got some pretty strong headwinds. Revenue actually dropped 20% from last year, margins got squeezed, and they're dealing with government contract delays. Not great. But in the other corner, you've got some massive strengths. A backlog of $376 million, a record-setting cash pile of over $456 million, and importantly, they stood by their full-year guidance. It's a classic case of short-term pain versus long-term financial muscle. And you can see that pain reflected right here in their profitability. We're looking at adjusted EBITDA, which is just a way to measure core profitability. Last year, they made about $1 million. This quarter, they lost over $9 million. So what happened? Well, it's a combo platter. That lower gross profit we mentioned, plus they are deliberately spending a lot more money right now to set themselves up for that future growth. They're in investment mode, big time. So let's pull all this together. What does this mean for the next call? Here's our take on the outlook and what really matters from here on out. Okay, so here are the big things you need to keep on your radar. These are the catalysts. Number 1, obviously, is closing the Ask Sage deal. They've got to get that across the finish line. Next, we need to see those delayed government contracts finally start coming through. Then you'll want to watch the margins really closely. Can they get profitability heading back in the right direction once Ask Sage is folded in? And finally, the big one will be when we get our first look at their 2026 guidance. That's when we'll see if those synergy dreams are turning into real numbers. So, with all that in mind, our call on this is an outperform rating. Look, the Ask Sage deal could be a total game changer for them. It has the potential to transform BigBear from a company that just sells services to one that sells a scalable, high-margin platform. Now, are there risks? Absolutely. Execution is everything. But we think the market is going to start looking at this company in a whole new light, as a key AI platform for the defense world. And that story, we believe, justifies a more bullish stance. All right, so let's get down to brass tacks. How could someone actually play this? Let's talk about a potential trade idea. And that's really the big puzzle here, isn't it? You've got this story with two competing forces, the short-term struggles of the old business versus the huge long-term promise of this new AI platform. So how do you even approach that as an investor? Well, here's one possible way to think about it. We're calling it a staged entry. The idea is, instead of jumping in with both feet right now, you could build a position over time. You'd strategically buy shares on any dips or weekdays between now and when the deal closes. The whole point would be to get your average costs down, aiming for something under $6 a share. The bet is that once Ask Sage is fully integrated and those synergies start to show up, the market's going to reevaluate the stock, and you'll be in at a great price. And of course, we always have to end with this. Remember, this is just our analysis and breakdown of the situation. It is absolutely for informational purposes only. You have to do your own homework because this is not financial advice.